It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
It'll be interesting to see if there's also some interest rate offers creeping in as well. We saw Westpac decrease one of their loans by 10 basis points recently. I'll be keen to see if other lenders follow suit and if we see an interest rate war as well as an incentive war for custom among the banks.
And that is Graham Cooke on the Real Estate Breakfast as we welcome you back right around Australia to another busy episode. Yes, talking your property news, trends, market fluctuations. Many Aussie cities are running at different speeds, and that is still the case. And with over 1,400 property episodes, you can keep pace, of course, what is happening in your backyard. Middle of our working week, it is a Wednesday, October the 15th. A shout out to you if you have got COVID and you've come down sickly. I am just sort of coming out the other side. It feels like it's got a long tail to this. Auction markets, now they're showing renewed strength with about 7 in 10 homes selling under the hammer in September. That is the highest clearance rates in over 2 years. And if you break it down, Melbourne reached 69.4% and Sydney 71.2%, driven by improved buyer confidence after 3 interest rate cuts this year. But some are saying, and also warning, that the optimism masks caution, with buyers still price sensitive and wary of overpaying. Analysts, on the other hand, say that clearance rates above 60%, that does signal a rising property price market, while 70% reflects a healthy, steady property market. Now, there is a lot of gas, I think, in the tank between now and the end of the year when it comes to the auction market. And good luck if you are planning out the strategy for your upcoming weekend auction. If you're going to one of those, you do need strategy, right? Because I think we all know of these people who are so relaxed when they go into an auction because they have done zero game time on what they're about to do when they launch into the auction. So yes, make sure that that is not you. Make sure that you game plan it out. We've given plenty of property information about how to approach that as we catch up with Graham Cooke from Finder. And good morning to you, Graham. Welcome back into the Real Estate Breakfast. Never ceases to amaze me, you know, how people can go into auctions totally underprepared.
Good morning, Craig. How you doing? Yeah, I mean, I have to admit we were in this space too. I think it took us 4 auctions before we finally bought our first house in Sydney about 4 years ago. But we went to 3 auctions. Went into 3 auctions, I'd say completely unprepared in terms of realistically understanding how much budget we needed to have or how much stretch our budget, you know, until finally the budget and the auction price kind of coincided and allowed us to finally nab that actual purchase. But yeah, it's definitely not first time lucky for most people going to auctions.
Did you have a really big voice when you were doing the bidding, and were you rampant in terms of just increasing it super, super fast?
No, you know what? So it was a new house we were bidding for in Newtown. It came down to 2 bidders, us and another family, both first-time buyers bidding. And actually, we won the auction, but it was passed in. So they refused to sell at that price point, even though it was well above the asking price. You know, this is the way the real estate agents kind of get us by giving a false asking price that's actually way above what the seller expects. So we had to go into negotiations, and we ended up agreeing to pay, you know, a few thousand more than the peak of the auction price. And I was a bit concerned after we did that we'd overpaid, but the house is worth a fair chunk more now than it was in retrospect.
Yeah, that's the thing. If you find a property that you absolutely love and it is long term, how many people make the mistake of, for a few $1,000s, they just say, no, we can't go there on that price point, which is crazy. You know, if you pay an extra 10 grand, what does it matter? If it's long term, you'll soon get that back. Now, talking of money is on everybody's thoughts at the moment. And we've got 3 out of the 4 big banks saying that, well, they're probably not going to cut the rate until next year.
Yeah, this is true. ANZ is the most recent one to join that group. So even just a month ago, from our panel of economists in our REA survey, we were looking at a potential cut in November. That's what most people were pointing to. That seems to have shifted, with most of the big four banks now saying we're not going to get a cut until 2026. So we could be looking at static interest rates for the rest of the year. Interestingly, even though that's the case, Westpac have actually made the move, and even though they're predicting no cash rate cut, have dropped 10 basis points off their online home loan, bringing it down to 5.24%. So it'll be interesting to see if the other lenders follow. So basically, if they, give everybody who's getting a new home loan a portion of a cash rate cut, even if the RBA themselves aren't going to do it. But this kind of stagnant market, I think this cut shows that there's an increasing level of competitiveness between the lenders to try and grab that kind of borrower attention, because there's not a lot happening with interest rates. So we're seeing that Westpac cut. We're also seeing more incentives being offered on top of home loans, as well as just the interest rate.
Yeah, well, let's just talk about those incentives, because we've got the incentives. They've been there probably for the last couple of months in particular. And now with First Buyers Guarantee Scheme kicking in on the 1st of October, the market is starting to heat up. And they're wanting to incentivise as many people as possible and get them in before 2026. So there's a bit going on with all of that.
Yeah, there is. The most recent one is the Commonwealth Bank package, where they are now offering 300 Qantas points for people who sign up for their online loan. It's 5.39% LVR. That's, I think, the highest number of points that I've seen offered for signing up for home loan recently. Even Qantas's own home loan only offers 200,000 points on sign up, and Commonwealth Bank are offering 3. They're just 2 of 5 different home loans currently offering large chunks of frequent flyer points if you sign up. And at the last time we counted, 11 different home loans offering cashbacks of up to $5,000 with Bank Victoria if you sign up with them. So banks are really trying to offer other bells and whistles as well as just an attractive cash rate, because they're finding it difficult to be competitive.
I was talking to a mortgage broker just yesterday, and she was telling me that she's amazed at how many people have not factored in just the borrowing capacity, where they couldn't get the money, but now they qualify. And she was contacting all of her potential clients, letting them know that get in touch and start talking to us, because the game has changed. And it seems quite funny how quickly and rapidly that has changed. It's all about the sentiment, of course, and the way the banks can feel about any given month. That is all in the favour if you are looking for money right now to loan for a property.
Yeah, definitely the lower rates makes people be able to afford to borrow more, which potentially allows some people to kind of afford that home they were hoping for before that they couldn't afford. That, combined with what you mentioned earlier, the 5% deposit scheme from the federal government, and this kind of return to the market of investors. We've seen investor borrowing up by about a third compared to where it was a year ago. All of this, I think, will be fuel under the fire that will keep the housing market and housing prices kind of going up for the next kind of year or so anyway, which won't be great news for first-time buyers who are trying to get their foot on the bottom rung of the housing ladder, because even though borrowing is getting cheaper, house prices are going up, making the deposit more difficult to save and it's a vicious cycle for them.
Yeah, vicious cycle. So if you haven't spoken to your mortgage broker recently, make sure that you do it. All right, we're talking to Graham from Finder. When we come back, we want to talk about the potential house price forecast. We'll talk about that next.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
What is one of the hardest things at the moment for you looking to get into the Melbourne property market? I mean, for somebody that has the experience of owning property, you've built up, by the sound of it, quite a bit of equity in your transactions over the last few properties. But still, transacting is transacting. It doesn't just automatically happen easily for people when they're looking at buying.
Exactly right. I think the biggest challenge I've had in my career, being with my own business, is actually getting past the banks more than anything, because they see obviously people that are self-employed as high risk. So my goal will be to self-fund the next property as much as I can and to take out a low bank loan as possible so that I can get in the market. So that means I've got to be smarter in business first before I make a property purchase. My eyes are definitely on purchasing in Melbourne because I love Melbourne. I always have. And I was actually living in Melbourne 30 years ago before I moved to the Gold Coast.
Let's fuel your passion for property together. Join us, along with our industry experts, to help inspire and inform your next real estate decision.
It is a Real Estate Wednesday. We've got Graham Cooke from Finder with us, and we want to touch on the potential house price forecast. This is into 2026, Graham.
It is indeed, Craig. We have the combined forecast from Westpac and ANZ at the moment. For 2026, it's interesting, we're seeing pretty house price forecasts that are larger than in 2025. So for Sydney, for example, we're seeing about 5% across the two banks, whereas they're kind of saying 7% for 2026. For Melbourne, we're seeing it go from 4 to quite a large 7% as well. So nearly double the forecast in Melbourne next year compared to this year. Also up in Perth and in Adelaide, not so much in Hobart and Brisbane for some reason, but generally pretty positive house price predictions from the big two banks for next year.
So where are you sort of looking between now and the end of the year, which is kind of looming large? What's the number one story, do you think, that you're tracking at the moment as we head up to Christmas?
Really, it's the increased diversification of the kind of home loan market in terms of kind of what we spoke about earlier, lenders trying to get people on board with other incentives rather than just basics, because there's not a lot of cash rate movement and it's an increasingly competitive market out there. It'll be interesting to see if there's also some interest rate offers creeping in as well. We saw Westpac decrease one of their loans by 10 basis points recently. I'll be keen to see if other lenders follow suit and if we see an interest rate war as well as an incentive war for custom among the banks.
We've had a really monumental year post-COVID, for 2025. Literally, I reckon anything could happen next year. What about you? How do you feel about 2026?
It's interesting. It's been a tumultuous few years in the housing market. If you look at kind of predictions, even before COVID, we had some of the banks predicting, 10, 50% drops in the housing market and, doom and gloom, and none of that really happened. And it has continued to be robust, and it continues to be robust. What will be interesting to see is if that continues and what happens with the global kind of economic spectrum right now, because there's been a lot of predictions in the UK, or warnings in the UK, for example, of an AI bubble in the share market. The share market's heavily leveraged towards AI right now. There's more value being placed on Nvidia, for example, which is a company that manufactures chips which drive AI, than the whole pharmaceutical industry in the US. I was reading recently in terms of numbers or something like that. There's huge amounts of money going into AI. If that turns out to be a bubble, like the .com bubble multiple years ago, and this is 4 or 5 times bigger than the .com bubble in terms of financial investment, that could cause financial turmoil, and that could then be something that affects everything in our lives, including the housing market. So really, to see what the housing market will do, I think we need to keep an eye on kind of global financial markets, and those are very unpredictable right now.
Yeah, I don't think in any way or shape is AI going to be a bubble. I cannot see that at all. AI, by the time we get to the end of next year, the amount of job losses, redundancies, etc., is going to be a very interesting number to look at. We'll leave it there, Graham. Great to chat. Enjoy your Wednesday, and thanks again for coming back on to the Real Estate Breakfast this morning.
Thank you, Craig. Cheers.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
The average attention span is 47 seconds and people are doing all sorts to get noticed. But again, I think you've just got to truly believe in what you're doing, be true to yourself. If you want to be in real estate, it should really be a genuine care about your clients.
Last week, of course, we were talking a lot about the first home guarantee scheme. You would be expecting to see a bit of a rush on between now and Christmas time with those first home buyers.
Absolutely. And going back to what you touched on at the start about so many Melbourne suburbs being affordable, we've had land tax, we've had increased Airbnb tax. So many homes have come up for sale and taken quite some time on the peninsula, unfortunately, which is hard to see. However, Melbourne is expected to lead Australia's property growth in 2026. House prices are projected to rise around 6.6%.
We connect you to the best real estate information across Australia. The Real Estate Podcast.